मित्रों नमस्कार. Welcome to your favorite YouTube channel Dr. Pawan Jaiswal. A big problem before each and every businessman regarding income tax is that I am not interested to maintain my books of account. Rather, I am unable to get my account audited by a chartered accountant. Most of the SSEs are unaware about the importance of the maintaining books of account. Sometimes they are not getting bills, vouchers, purchase invoices. Sometimes they are not interested to raise sales invoices, etc., etc. That's why accounting is incomplete. Good news for these type of SSEs. Government of India, Ministry of Finance, Income Tax Department has proposed to give a big relief to those who are not maintaining books of account. There is section 44AD. Remember, there is a section 44AD. If you are concentrating on business, if you are concentrating on your trade, but not interested or not interesting in maintaining the books of account, bills, vouchers, or do not want to get your account audited by a qualified chartered accountant, then it is good news under section 44AD for you. But there are certain conditions to avail the benefit of section 44AD. Number 1, your turnover must not exceed 2 crores rupees. Remember, your turnover must not exceed 2 crores rupees. If your turnover is less than 2 crores rupees, then you are eligible to take the benefit of this section 44AD. Under this section, you are supposed to declare 8% of your total turnover as net profit. If you are declaring 8%, minimum 8% of your total turnover as net profit and ready to pay tax on that 8% of net profit, then under the provisions of section 44AD, you are need not to maintain books of accounts, or you are also exempted from getting the accounts audited by a chartered accountant. But if you are declaring less than 8% of the turnover, then maintaining books of accounts and getting the accounts audited by a chartered accountant is must. A big deal given by Ministry of Finance after demonetization to the Indian businessmen. That is, if your trade is 100% digital, if all the financial transactions you are making through your bank account, that is current account or saving bank account, you are not resorting on cash transactions. You are discouraging the cash payment and cash receivables. You are 100% relying on digital payments, payment through credit cards, debit cards, online payments, RTGS, through demand draft, banker checks, or through account paychecks, but not through bearer check. In that case, this section 44AD is much liberal. Here, you need to declare only 6% of your turnover, which is less than 2 crores rupees. If your turnover is less than 2 crores rupees, in that case, if you are declaring 6% of the turnover as net profit and ready to pay income tax on that 6%, then again there is no need to maintain books of accounts and getting the account audited by a chartered accountant under section 44AB and under section 44AA. What is section 44AA of the Income Tax Act? It prescribes the maintenance of books of account. And what is section 44AB? It prescribes that your account should be audited by a chartered accountant. Now, the question is, if a person is totally relying on digital payment and if a person is relying on cash payments, what exactly the benefit derived by a businessman who is following the online payments? Suppose a turnover of X is 2 crores and turnover of Y is 2 crores. Exactly 2 crores. X relies on online payments whereas Y relies on cash payments. Here, in case of X, who is relying on online payment, is required to declare 6% of his turnover, that is 12 lakhs rupees. 6% of 2 crores comes to 12 lakhs rupees. And he is required to pay tax on 12 lakhs rupees under the slab prescribed by the income tax department. Whereas in case of person who is relying on cash payment, he is required to declare 8% of the turnover, that is 16 lakhs rupees. In case of Y, the Y shall disclose 8% of 2 crores, that is 16 lakhs rupees. Meaning thereby, the Y shall required to pay tax on 16 lakhs rupees under the slab prescribed by the income tax department. Here, what is the difference between X and Y or A and B? A is paying tax on 12 lakhs rupees whereas B is paying tax on 16 lakhs rupees. The difference between the two is 4 lakhs rupees. And you know, when income of any individual exceeds 10 lakhs rupees, he is subject to a tax of 30%. Meaning thereby, the person who is relying on online basis is not required to pay tax at the rate of 30% on 4 lakhs rupees. That comes to 1,20,000 rupees. It means a maximum saving of 10,000 rupees per month, that is 1,20,000 rupees per annum, is possible if your turnover is up to 2 lakh crores rupees and you are relying on 100% online banking. Thanks to Ministry of Finance for giving this much of comfortable zone to the businessmen of India. Friends, I hope my today's presentation will create a different kind of confidence to rely on online banking, and truly it is the need of time to start banking digitally or online. If you like my videos, keep on watching my videos, forthcoming videos. Subscribe this channel if you like it. Share the videos with your friends who are living in India, abroad. If you like it, really like it, share it. And if you have any problem, if you have any question, if you have any query in your mind, let me know. Feel free to keep in touch with us. I will try to give the proper and reasonable and authentic solution as per Income Tax Act. Thank you very much, friends. Namaskar.